Hi, Mish. It's great to see you.
Oh, if there's somebody I missed, it was you, my darling.
I know. I've been just watching these crazy markets and really have been so anxious to sort of get your thoughts on what's going on. Now, things have calmed down a little, but you can still tell, the market tried to bounce back. It did make up some ground, but there's some wobbles today. We have a lot happening in terms of getting some economic data in. So there's a lot to unpack. Let's start broadly with the U.S. economy, because that seems to be the sort of center of where some of the concerns are. A lot of people talking about recession. We are going to get that key inflation data this week. I know that you have your own modern economic family that you use as a sort of proprietary tool for you to get a sense on what's happening in the economy, where the opportunities are. What are you seeing? Do you see recession ahead?
No, I really don't. I think I've used the word stagflation. In fact, Maggie, I went on Fox today and Charles was like, why are you saying stagflation? You're like the only person in the world. Well, usually when I'm the only person in the world, I find that encouraging. But recession actually means that we're going to see GDP go down and growth really slow all across the board in the jobs market and consumer spending. And we haven't really seen, other than a stagnation, more than that. I have not seen a real slowdown. I mean, even when we go out, the restaurants are still packed, the airlines are still packed, people are still shopping, maybe they're buying more staples, but the narrative is inflation's going down. I don't know if I necessarily believe that. So the only reason why I think this best signal to see if we're going to go into a recession would be how aggressive the Fed gets with a cut, if they cut it all in September. If they go half a basis point, that means they're seeing stuff that we're not seeing yet. But I can tell you that the junk bonds, the high yield bonds, are certainly not reflecting anything that even remotely looks like recession. If anything, they look kind of roseate and optimistic, which means the market sitting right here actually can kind of go either way.
Yeah, and this is, I think, what's so confusing to people, right? Because you saw those concerns. They're pricing in a lot of rate cuts, right? I mean, this is the drumbeat is the economy slowing. Now the Fed's behind the curve. So the market really had that swift reaction for bonds, but you didn't see that in junk bonds, which not everyone tracks that well. So who's right? I mean, is it the Treasury stock trade that had it right? Are junk bonds not functioning the way they used to? Are they not the same kind of indicator? How are you thinking about that?
Well, the reason why people are buying high-yield debt bonds is because they want the yield while the interest rates are still strong. That's a good sign. So I would say that they're probably right in that they're not necessarily bailing out of that trade, even though long bonds, which is more risk off, is actually also catching a bid here. So, the best thing I can say is when you have lack of clarity, that's clarity. And generally that means, when in doubt, don't. That's kind of like what I'm saying right now. You, of all people, will appreciate this. I went to dinner with a bunch of girlfriends last week, and they were all very sophisticated, retired, young. They have their IRAs and their 401s. They're not active investors by any means. But I decided to put on my Maggie hat and say, what do you think's going on in the market? This was after that huge 1,000-day decline. Well, why do you think the market's going down? And they said, it's August. It always goes down in August.
Oh my God, they are sophisticated. They're way calmer than the traders who were like, the yen carry trade's unraveling. Trillions of dollars are going to get sucked out of the market.
I know, I'm like, brilliant. Here I do, all I do is analyze, I come up with all these explanations, and they just said it in the sentence. Chill out, it'll come back in September. And that could be the case.
Yeah. So just to wrap up on the economy, so we got retail sales, and what you say has been the case that this is the recession that everyone's been waiting for. Everyone gets it in their minds, and then it doesn't materialize. This has been, the biggest fake out for everyone for a long time now. So you don't think there is a recession, but you also said that you don't necessarily think inflation is going to continue to go down, because stagflation is when you're kind of, your growth starts to stall out, but the inflation still remains a problem. do you think inflation's coming back, or did you just not see it dropping any further? What's happening on the inflation front?
I've never seen inflation so nuanced. If you look at all the stats that came out today ahead of CPI and PPI, you would think that inflation is over.
Yeah.
But meanwhile, oil crept up close to $80 a barrel today. Gold traded over $2,500 an ounce. Silver just rallied back up to 28, and who knows if that can go higher. I mean, yes, are there pockets that definitely have been disinflationary? Obviously food prices in terms of the grains, but then you go to the supermarket and you don't see it reflected there. So it is the craziest inflation period, and it still reminds me kind of what happened in the 70s, where CPI went way down and everybody thought, okay, we're out of the woods. The Fed lowered, we're afraid of a recession because we had just kind of come from a recession, so going to a deeper recession, and then whammo, you had more conflict, more geopolitical divide, not only that, but the monetary policy misstep, and then a president who didn't necessarily pay attention to debt and spending, just like we have now, and inflation went nuts. Listen, I totally want to be wrong about this. I don't want to see inflation go nuts. But I drove by the gas tanks the other day. I have a hybrid car, so happily, unless I leave Santa Fe, I don't have to fill up. But I'm always checking the gas prices. And they were up back to near where they were a couple of months ago, when they were, when gas prices were, here were less, by the way, because we pay less taxes. But $3.45 for us is like the equivalent of close to $7 in California. So, I mean, convince me, market, that inflation is over. And then if you look at an ETF called IVOL, which measures volatility of inflation and of the bonds, that had a major breakout. So
yeah, that's Nancy Davis's ETF.
Yeah, it is. And
yes,
and actually she and I have become kind of pals, and we've been talking about it. And I thought it was a brilliant little tool to use as an inflation hedge, way better than tips or anything like that. But let's talk about recession. Why do people want this is always, to me, the rub, is that people love to be fearful and love to go into the recession place. Now, of course, we know recession is the best cure for inflation, but what if the Middle East situation right now, Iran is barking, but we still haven't seen the bite. If that doesn't necessarily escalate, and Russia, Ukraine, that's like so back burners, like, okay, whatever. What if none of those things really happen, and the Fed, in a slow economy, when the Fed lowers rates, it's a warning sign. But in a good economy, if the Fed lowers rates, it means that there's strength. And we don't know which way that goes yet. So I say just be a little bit patient before you make these crazy calls. And call it for what it is, stagflation, because we still have a lot of stickiness in services, and we still have a lot of high prices around the board. And if we go into growth, then basically what we're talking about is the data centers and mining for more raw materials. I love commodities. I understand them. There's supply, there's demand. You go into stocks, there's so much manipulation between corporate buybacks, the CEO changes, their forecast for earnings is not there. There's so many variables that commodities, to me right now, so beaten up. Hedge funds are more short than they've been since 2011. I'm like, are these people mad? Because there's nothing crazy going on in the world.
Yeah.
So I think
because they are chasing the winners, no doubt, which have been tech and Nvidia. That is not the case the last month or so, but
if Nvidia was red today, though, we would have had a much uglier day. It actually maintained being green. Still has a long way to go to get back to where it broke down from, but still, it was green. So everybody's going, yay, let's go back into growth in tech. It's going to save the day. And it might, but again, we don't really know that yet. Patience.
Yeah. I want to go through some levels that you're looking at in risk and opportunity, but I want to stay on the commodity theme for a moment, because I saw a headline, and I thought of you, of course, and it was about copper. So I think it was something like copper signaling recession, Mr. Copper. So some of the other commodities you're watching, but what about copper? That has been a concern for people. What do you make of what's happening in the copper market?
Well, copper is, I love that you chose that one because that's probably the most interesting right now because you have two areas for the copper. Number one is, right, as a recessionary indicator, they say if copper goes down, it means, and you could see why, it means the housing market is slowing down. And that really, by the way, talk about nuance, hasn't really happened the way people think it might in a recessionary environment, certainly not 2008 looking. So, and China demand has gone down. China's having issues. You and I always talk about China. Don't ever dismiss China as a superpower. It's just takes a much longer time frame. So all of those have been the negative factor for copper. But then if you want to talk about the other side of the equation, if we don't go into recession, how much copper is there really as probably the number one metal to run these data centers and these AI computer centers? That you need copper, and how much is there? And then it doesn't come out like that of the ground like in a day. Oh, we need more copper, let's go in the mine, pull it out, okay, here we are. It's a process. So yeah, copper's come down, but if you look at it, it actually again now looks a little bit like it might be bottoming here, so it's worthwhile watching. I wish I had something more definitive to say, but I think that, like I said, sometimes the best thing is to take all the confusing information and give yourself a pass on having to figure out what's coming next and just wait for what's coming next.
Well, we forget doing nothing is an option. For those people, so there was so much sort of discomfort, and everyone is so fearful a lot of the time with good reason, because if you get on Twitter, it's very easy to get sucked into that fear loop. But if you had tech names in your portfolio and you are not a week-to-week day trader, okay, let's make sure we put time horizon on that.
Right.
Would you be concerned about another leg down? Should people worry about a drawdown, a more sort of volatile fall, or do you just kind of ride it out, hold your positions, and understand that it's going to be wobbly here? How are you thinking about that tech sector?
Another great question. So if you're already long some of these tech stocks and you've been riding the wave and you aren't planning to cash out tomorrow because you're retiring and you need the money, I would probably say I wouldn't add to this position necessarily, and I wouldn't necessarily think buy the dip right here, right now. But I wouldn't exactly get scared out if you have some holding power, and hopefully you're diversified enough. That's been the key all along. We've talked about how much gold should you have in your portfolio. Well, I hope people listen to me because we said right now you should have a good chunk of gold in your portfolio. How much fixed income should you have? Well, right now, while we still have relatively high interest rates, you should have some of that. Now we could start saying, well, long bonds obviously broke out. We haven't gotten through that 100 level in TLT. We've tried it twice. October 2023, we got there, and that was the low of the market, and we started going up. I don't see that same relationship happening right here in August 2024, so long bonds look like a good protection. And yeah, I mean, if you are in tech and you have staying power, fine. I mean, I personally hardly ever really lose money because I'm much more active, but I took a couple of hits on that huge decline. It caught me a little bit off guard because it was more risk on, risk off, and then whammo. So I would say have some pain threshold. And if you're not in tech and you're looking to get into tech, just remember right now, I would almost rather see them all clear back over major moving averages, which they're still well under, or the July 6-month calendar range that resets twice a year, which they're still well under, or the momentum, which is still in a bearish divergence. I'd like to see any, or they're all underperforming the SPY right now too, tech, NVIDIA, Qs. Something's got to give me a warm, fuzzy feeling about telling people, okay, buy more.
Yeah, this is when all of your experience, and for those of you who are in the market a long time, really matters, because for everyone who's scared, there is somebody who's looking for an opportunity to buy. But I sense from a lot of you that you just haven't seen, you got dry powder, but you just haven't seen those confirmations that you want to be able to step back in, because it does feel like you could get a little more washout, or some renewed selling pressure, because you've got to think that everybody who needed to get out, some people did and they sold their winners, but you can imagine there's some other people who are cash strapped who maybe are looking for another opportunity to raise some capital and sell those winners again. It just feels a little bit like that, doesn't it?
Yeah, well, and I always love to use not only my girlfriends, and how simple that was, but then the other side of the equation was when I go for a mani-pedi, and he's an Asian immigrant here and works almost 24 hours a day, it seems like, 7 days a week. And he said to me a few weeks ago, I bought Apple, I bought Amazon, I bought Google, I bought Nvidia. And I knew it was the high. So now I'm like, okay. And then when I walked in 2 weeks ago, he said, should I be buying more on this dip? And I think people have to really be careful at what they hear in the media, because the mainstream media, thinks that AI is the future for everything, and it probably is, but valuation is totally different. And on these last rounds of earnings, they were all pretty clear that the costs are rising. As we just mentioned, raw materials is part of that, and if those costs go up, but just the whole idea of creating these mining centers and keeping up with the technology, constantly doing R&D, is a cost. And how much of that cost can be passed on to consumers? Do we really know what the true value is yet? And I don't know if I could say yes to that question at this point.
Yeah, it's always good to get that pulse on the street, because it does tell you a lot. What's it feeling like in terms of crypto? Because that got hit with risk off, although Noelle Atchison, who does Crypto's Macro now, who I know that you know as well, she noted a great thing. In the midst of the fear, at the height of the fear, even though Bitcoin and Ethereum were down, the ETFs were not, you didn't see the liquidations you might have expected into ETFs. And she thought that was really interesting. I mean, she's always talking about, as are you, the fact that there's like there's the technology, and then there's the sort of, correlation with risk assets, and the fact that this is still a very risky asset class. What have you been picking up in terms of the work you do in crypto?
Well, a couple of things, and I totally agree with her. We were long blockchain, BLOK, for the clients. I sold some with profit, got back in on the dip, sold some again, bought the dip again, right around where it closed today at like 33.50. And it has held up with the swings and the volatility in Bitcoin, for example. But I actually think, now there's a place where I would buy the dip. And when it crashed last week and broke 50,000 for a nanosecond, I didn't buy Bitcoin, but I bought more Chainlink at like 850. And so that's kind of, first of all, I'm very bullish. I think long term, I still think it's going up. The fact that it closed at around 58, considering it was $10,000 lower that last week at its nadir, and then what, it got up to 61, 62. To me, this is all noise. I still think that we're going to see much higher prices at some point, probably end of September, October is my prediction. And here's my tip, and this was something that Holden taught me. When you look at the volume patterns, if you see a lot of cash inflow, and that would be like a big green bar of accumulation versus the red bar of the volume the day before when it was going down, that tells you a cash inflow is coming in, and that's really, I think, when the best time to buy the Bitcoin, whether it's Bitcoin, and then of course people are messing around with Ethereum and all that stuff. But if you take a look at a chart, I mean, really, that big dip probably was a great buy opportunity, and now, I still think we have resistance on the way up, and there's a lot of tops up there around 72. But that thrust that we got in February to March, where it really broke out from that 52,000, unless we really break that, I'm not so terribly worried.
Yeah. I was just thinking about something when you were talking about the makeup of your portfolio. Is 60-40 suddenly not dead again? Because when we saw bonds rally, someone asked me that question, like, oh, maybe it's not over, because we put the cemetery stone up. I mean, that was it. Like 60-40 was completely dead. Do we have to rethink that again?
Yeah, and it's so interesting, because this is what makes the commodities and equities so wonderful. Everything is cyclical. Nothing is dead forever. Could be dead for a long, long time. but not forever. And so exactly that. When you saw the TLTs get back over 90 and then 92 and then 95 was really to me the area. And today it closed like at 96.50. If we can get through that 100, besides the fact that that's the best risk off, it's already outperforming SPY. And it hasn't been a safety play, but if it becomes a safety play, again, you'll see that's when you're going to start to see those high yield debt junk bonds come off a lot, because those people are going to race out of that and they're going to go back into the 60-40 type of situation. That's my prediction anyway.
Oh, that's so interesting. We also have to revisit gold, which you mentioned when we were talking about portfolio construction. How are you feeling about gold here?
Well, 2,500, hello. I mean, that's, we've talked, you and I have talked from 1,500, 1,800, 2,100, 2,400, and we've always gotten some kind of flack from people, why, it went down $50, it's over. And clearly we can see that, yes, there's been times where it's come off a little bit with some week-long liquidation, but this is a train. And I don't know if I say the train has stopped. We may see 25.10 go back to 24. I mean, that's the kind of thing. But there's something where I can very, very securely say, at this point, buy the dip. That's the gifts. 2,700 next, maybe?
Is gold the best diversifier, do you think, in terms of trying to offset equities? We know that people are going to continue to pour into the tech sector. I just find it very hard to see that great rotation that everyone's been looking for really take place. I think people are just addicted to that sector, it seams like. So if you're going to do that, and it's hard to argue, right? It's been the outperformer. It's hard to argue against it. What's the best way to diversify if you're like, listen, I'm all in on tech, AI, whatever it is that you think is coming. But I am worried about the fact that it's maybe not a one-way street anymore. Is gold the best way to diversify? How do you think about diversification?
Well, it certainly has been to this point, but part of the reason is because we're not in a recession. And gold doesn't like recession, just like anything doesn't like recession, except for a couple of areas that always do well, utilities being one. But even that's separated from the market's typical definition of the utilities. So yeah, I mean, gold right now is fantastic, and I'm certainly not seeing it come to an end at this point. Gold miners start picking up today. That's usually a good indication that gold's going to continue. But if we're going to go into a recession, and we do see signs of that, that's why I keep saying the simplest thing that people can do right now is watch those high yield bonds. Even if you know nothing about the fundamentals of them, just look at the price. If you look at HYG, it's above the 50-day moving average, 78 over that's kind of a nice breakout. That's telling you there's no recession. But also watch the long bonds, because if the long bonds underperform the junk bonds, even if they go up, good sign. But if at some point the junk bonds stop going up and stop falling, and the high yield and the long bonds start going up higher and higher, then gold will not necessarily be the thing. Then bonds will be the thing. Just the last time bonds were the thing was COVID.
Yeah. I always, every time we have a conversation about bonds, I always remember a strategist long ago saying that the bond investors never get it on the way up, but they always nail it on the way down. They get that turn when it's going into recession for whatever reason. So I think it's super important for people to put that on their radar. Anything else you're watching, Mish, that you have your eye on that maybe some others may not, since you cover every asset class?
Well, we could talk about emerging markets for a second. I got out of Vietnam ages ago, and now Vietnam.
You liked that for a while. You're out of that.
Yeah.
Huh?
I've been out of that since the beginning of 2024 because it crashed. I got out. But now it actually had an island bottom. So did EWZ Brazil. And if we do wind up needing these raw materials more, countries that produce raw materials would be of interest. Mexico got beaten up after the woman president became president, and I think that there was no reason for that. So I like that. But I have my predictions for 2025, and they're not ready yet, but I'm waiting. And one is, of course, still my vanity trade, even though everything got hammered today. I do believe at some point we're going to start to see, I heard a great story about Kentucky. This little town in Kentucky, I forget the name of it right now, has 38% of their population is obese. And now they have 4% of them. 4%, it's a small little town, are using Ozempic or GLP-1. And if they can't afford it, they're going to these sort of telehealth black marketplaces to get imitations. And they're losing weight and they're keeping it off. And they're watching how the economy of this little town is changing. People going out hiking more, eating less junk food. So I still think that hasn't even hit the consumer market. And
right, it's in the zeitgeist, but the actual economic effects of it, it's a much longer rollout, isn't it? And we're just beginning to see that, because I think we all anecdotally feel like we know people who I saw someone and I literally didn't recognize them. They look amazing and so much healthier. We're thrilled. But, every once in a while you're like, oh, wait a second, if you haven't seen them in a couple months. So we sort of see it, but the mass amount of people that may be onboarded to this, and then the knock-on changes, takes a little while to play out. So I think you're right. I think so from a media perspective we know about it, but have we really seen those impacts yet? That's super interesting.
Well, the interesting thing about the Kentucky story was it wasn't Hollywood and it wasn't New York. It's Kentucky, a small town there. So
that's where you're going to see it, though, right?
Right. That's where Main Street,
America, right? Main Street, in all these different areas that have really struggled with that. It's going to be huge.
And the other thing I think for 2025 is EVs and solar energy got really bombasted this year. Just got tanked. Tesla's trying to struggle back a little bit, but it's not feeling really strong. Rivian would be another one. I think that, I don't even care who wins the election. I think either candidate, we're going to see a comeback, I think, of EVs. Now this blast off in oil prices is certainly more compelling for that. And also a move back to green energy. And I'm starting to hear buzzes about it from Republicans and Democrats.
Oh, that's so interesting. You are a contrarian, Mish, because everybody thinks that's dead, right? Like that sort of COVID killed that.
No, it didn't. It just put it sort of in a coma for a while. That's how I look at that. How can it be dead? We're having crazy weather patterns. People aren't stupid. They can see that not just economically, your gas prices have come down, now they're going back up, but you could see the damage of these hurricanes and these tornadoes and the droughts, and now there's a freeze in Brazil and coffee prices went up. At some point you have to say this is not sustainable, and China knows this.
Yeah, that's the one thing they've been consistent about talking about. And add to that list tornado threats in places you've never seen tornado threats. All up and down. It's no longer just Tornado Alley. They're everywhere now because the weather patterns are so extreme. So I think you're right. It is sort of making its way in. And we also don't know. We have an entire younger generation of voters who are going to start flexing their muscle at some point, right? So that,
I hope.
Yeah, that'll change. We're going to find out in a couple of months. We're going to find out.
I know. Well, you have young kids, so I'd love to know what they think about all of this, because the sentiment from Gen Zers, and your kids are younger than that, but the Gen Zers that I've known has really been like, thank you, boomers, for leaving us such a mess.
They're angry.
But that only goes so far. You got to do something.
Yeah. This is what we haven't seen. Like, what will that look like? That's going to have huge implications, and I'm really looking forward to talking to people in the run up to the election about that. I think that's going to be, I know everyone's talking about the obvious issues, but I think that young voter turnout is going to be super interesting. Do they turn out? What do they want? We don't know. I don't think they answer any polls. I don't think we have any idea what's on their mind. So it's going to be really fascinating to see what happens. And it may be that some of the polling that everyone's trusting isn't as accurate as we think it is. I don't know if it's a risk or if it's an interesting development, but I don't know that we're going to be able to tell that yet. So it's going to be really fascinating. Mish, I'm so happy to have caught up with you. As usual, amazing stuff.
Thank you, Maggie. It's so great to see you. I'm happy to see you back in the game.
Getting back, right? You're part of the early sneak peeks, but we will be doing a lot more, and we're so grateful for it. So thanks so much. We'll talk to you soon.
All right, thank you. Have a good trip with your girls.
Yeah, thanks.